Hi all, this is Dr. J at 11 coming to you live, streaming live from Long Island, New York, where the weather was just a little nippy, but quite nice. So the market had a little bit of that fall weather in it as it continued its fall. But it could have been worse. It wasn't a precipitous drop that made our tummy tum tums queasy like yesterday. It was kind of like up a little, down a little, up a little, down a little. At the end of the day, it decided what it wanted to do, what it wanted to be when it grows up, and it was red. It's been red before. It was only red less than 100 points on the Dow, something like that. Small losses. The biotechs took it on the chin again, even though the IBB did not. When I say the biotechs, I mean the small caps, middle caps. The large cap biotechs did better. So before I give you my spiel, I just want to remind you to do your own due diligence, that my opinions are strictly my own and do not constitute investment advice. And if you like any of my ideas, follow at your own risk. Having said that, uh, my main idea has been, and it still is, that this is not the crash. This is not a market crash. This is not the beginning of a precipitous off the cliff decline. It will play itself out, and probably by tomorrow will be green. We're going to start seeing green again. The grass will grow green this winter, metaphorically speaking. So do not fret, do not panic, do not jump out the window, God forbid. So, the market has its vicissitudes. It goes up, it goes down, and that's been the market for as long as I can remember. It goes up, it goes down. The general direction from the time we've been keeping records has been up. If you look at the chart of the Dow Jones Industrial Average, it looks like virtually an unbroken straight climbing curve. Of course, it had many breaks, including the most recently the 2008 2009 uh, huge 50% sell off, bear market. But that's just a blip in the chart of the Dow. And what we're seeing lately is a really, 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 really tiny blip. So let's not worry about it too much. Let's take a look at the charts and see how they look and why they reinforce my belief that we've gone down all we have to go down, and that's good enough reason to go up, I think. So let's take a look at the charts, beginning with the Dow. I'm also going to focus on CVM today, an old friend that we haven't looked at in a while, as well as, besides the Dow, we're going to look at Cronus, Apple, the NASDAQ, the spiders, Amazon.com, and CVM. Okay, so let's look first at the Dow. The Dow Jones Industrial Averages ended the day exactly down 100 points, or 0.4% to 25,286. During the day, it got down to a 50% retrace. That's why I say it doesn't have to go down anymore. This is a logical place for it to stop. It made a low of 25,193. The 50% retrace is at 25,205. So we got there. And it stopped. It turned around when we got to the 50% retrace, which makes me even stronger in my belief that maybe we've seen the bottom. Maybe, in fact, Dr. J will be able to draw a little low right in here. I don't know what happened to my Yankee Doodle dandies. I did have a few pointing out the high, the low, the high, the low, and the higher high. So this to me was an indication that the sell-off was over, and all we have to do is make a lower low, which we're going to do, I believe, tomorrow. I believe today will be the low, because tomorrow we will not reach the low of yesterday. How's that? So we will not reach 26,200 on the Dow tomorrow. We will open up and stay up and put in a nice green candle that will just fall short of this big red candle. And then it's off to the races. Once we get that big green candle, the 3 days, actually the 2 days of fright and horror will come to an end, as we will then go to a very bullish stance, taking out what I said before, taking out the all-time high of the Dow. So Dr. J is steadfastly bullish, and not to say that I don't believe we will get that crash eventually. I do. Okay, so at some point, Dr. J is going to have some doom and gloom, but not yet. Let's look at the NASDAQ. Okay, we have a high, a lower high, a high, a lower high, and an even lower high. So we're not cured on the NASDAQ yet. And what makes me optimistic, however, is that the decline today stopped exactly at the 61.8% retrace. So just like the Dow, there's no reason why the NASDAQ has to go down tomorrow. Just maybe we turn in a lower low right in here. I mean, a higher low right in here. That would be very nice. I would dread coming all the way back down to the lows of 1029. If that happens, I would say bear market. I really don't see that happening. Okay, spiders. Looks exactly like the other picture of the Dow, I guess. 50% retrace, fell just shy of that. So the spiders also do not feel obligated to put in any more downside. It went down enough. It's time to go up, spiders. Amazon.com, how about Apple first? Okay, I was a buyer of Apple yesterday at 196. I'm losing 4 points as it stands now. Apple looks particularly weak in that it tried to rally, failed, and closed with a reverse hammer. However, I'm not going to get too upset by that. I see support right in here at the 61.8% retrace. This is about 189, I think. Let's see what it is. 189. So if it goes there, Dr. J will just pick up some more and hold tight. I don't know that it has to go there, but it does look kind of weak, as does Amazon. Amazon had a better candle than Apple on the day. So I'm not sure we have the same analogy. Amazon looks a little stronger than Apple does. I would say there's no reason for Amazon to have to go down tomorrow. Maybe we put in the low and start going up. All right, CVM, and then Kronos, and we're done for the day. CVM is an old favorite. It had a tremendous setup here. It looked like it was forming a cup and handle, and then gave it all back. It's now testing this 50% retrace at about 260. I think it hit 262 today. This candle is not drawn to scale. There's something wrong with it. Yahoo Finance, get on the ball here. So I added some today near the close. I paid $267, I think it was, something like that. So I'm hoping that this 50% retrace holds. If it doesn't, it'll probably test 246. I'll buy, in which case I probably will buy more. So am I scared of buying CVM? No. Maybe I should be, but I'm not. Let's look at Kronos and call it a night. Okay, Kronos tested the neckline here and bounced well off of it. Good sign. I said I'd be buying Kronos. For some reason, I didn't pull the trigger to buy more. Maybe tomorrow I'll be in a Kronos mood. So that's about it on the day. This has been Dr. J coming to you live, streaming live from Long Island, New York, where I didn't get a chance to do what I wanted to do throughout the day. So I was home much of the day, took my little walk, and got on with you guys in a more timely fashion. Again, I apologize for coming on at 8:30 yesterday. That was sort of late. Meanwhile, let me just say sayonara. Thank you for watching. Thank you for joining me. Share the link. Subscribe if you haven't already. Don't mind the Yankee hat if you're a Yankee hater. I'm not that much of a Yankee fan. I'm more of a Met fan, but I felt like wearing a winning hat instead of a losing hat. So that eliminated my Jets hat, my Giants hat, my Rangers hat. This is the only hat that didn't have that losing touch. So I want it to be a winning day tomorrow. I put on my Yankee hat. Maybe we'll hit it out of the ballpark. Sayonara, shalom, farewell, adios amigos, hasta luego, ciao.